Ladies and gents, welcome back to part 2 of the GameStop trade. This is the second public trade I'm making here on this YouTube channel. Now, the last trade we made was on Marathon Digital Holdings. Similarly, we started off and then we kept dipping. And everybody, all the haters came about and they started commenting, look, I'm taking a beating. And then suddenly we closed in 30% profit. Today, this is the same trade and the same setup that I'm taking with GameStop. And I'm not taking this trade because of the hype that you see out there, like I said in the previous video. I am taking this trade because of the company itself and the financials and the improvements that it's showing. A lot of people can't see it because they don't know what to look at. So, let's have a look at GameStop. Let's talk about what's going on with GameStop's financials. And that will help you sleep at night, and then we'll look at the chart itself. But before I get in, just remember, no matter where the price goes, I'm not selling under the 25 mark. That's my entry, right? 25. I'm not selling under 25, ever. Matter of fact, maybe even 30 I won't sell. So let's have a look at the short interest. Since last week, nothing has changed, or since last video. Still 20% short interest, 1.5 billion in cash ready to be injected to buy GameStop shares. Now, just on that alone, that's a 30% increase. And if you look at the history of GameStop and the short interest, it has never dipped below 20% short interest over the last couple of months, years. Never. So that tells you a lot. Again, this is only what you can see. Now, we're not covering naked shorts here, the swaps that exist on the side, the put options and the expiry dates. All of this is not actually factored in here. Okay, and if you've been paying attention, you see what's happening with GameStop options, call options over $20. So a lot of people are bullish on that. The short score is 75 out of 100. It's good, right? That's very good because the max is 100. So this is only the statistics for shorts, but this is a retail favor, and you notice the fact that we have so much retail interest, the stock hasn't actually moved. The price is basically going sideways the last couple of days. Okay, and why is that? Well, there's a lot of course, shorts on that. It's not even sellers, guys. There's only people borrowing to bet on it to go down. There isn't much sellers left in this stock. So you notice it's just sideways. So we'll cover the chart at the end, but first, smash that like button. Make sure other people see this video. Look, we're gonna go ahead with the financials. So this is what the first thing they look at is the trailing PE or the forward PE. This shows if the company is overvalued or the stock is overvalued. Well, it is 1,000% or 1,000, yeah. It's overvalued to the extreme. Well, MicroStrategy is also 1,500. So it's not about overvalued with PE in this regard. It's more about, do we expect, I think the market is expecting a lot of great things from these companies, or they expect it to be valued at more in the future. That's why the trailing PE or the PE is high. Okay? So everybody knows that. But this PE doesn't even make sense in this regards. You wouldn't actually look at the PE because people are expecting a turnaround and they're expecting GameStop to have more cash. Okay, price to earnings we covered. Because once you start earning and you start cutting costs, the price to earnings starts making sense eventually. And of course, like I said, people are expecting further growth for this company. Look, the price sell is 1.28. Now that's pretty good, guys. Okay? Pretty good. And you notice 1.28 is pretty good here. 0.76. Under 1 is very good. Okay? Under 1, this is over 1, but this is the current, right? But we're getting there. This is for the year. But we're getting there, guys. Price book suggests that GameStop is trading 5 times as much as its balance sheet. Well, there's some stocks Tesla's trading 20 times as his balance sheet. There's these things, ratios are off. They don't really work in this regards. Because what we're expecting with GameStop is a turnaround. And we know the stock has been punished for no reason. People want to buy the stock, like Piton, like Palantir, whatever. People want to buy these stocks. And people are buying GameStop, but it's not moving. And they know this. And that's why reform is coming for the financial system, to expose naked shorting. Okay, let's look at financials now. So we covered these ratios, but let's look at this. This is what I want to cover here. I want to look at basic and diluted earning per share. Okay, this is first quarter 2024. Now look at the earning per share. This makes sense because it was a holiday season, right? So the earning per share is always great. So if we compare it, for example, I think that's for the full year. So this, yeah, that's for the full year. So there's improvements, guys. Look, 2024, we just started and we're already at 0.02. This -1, better than 2022, and well, I think we took a hit in 2022, but 2021 things were great because people were shopping more, I believe, and their cost was lower, cost of revenue. So you notice the cost of revenue has increased here, but it has dropped significantly, and of course the revenue also dropped. And we can say that this is due to where is it? Closing stores. So let's see, 2022 they closed 120 stores, 2023 42, and we're now on track for this year so far to 20 stores, and we're only 6 months in the year. So their cost is being reduced, and what's happening here is the revenue is also taking a hit, because when you close a store, you're actually getting rid of some revenue, but you're getting rid of huge chunk of expenditure or bad money. So you don't need that revenue if it's costing you more than what you're making, so you just get rid of it. Okay, and that explains the revenue drop. So if you consolidate, basically, and you consolidate your shops into profitable areas or regions, and the demand is the same, and you know the demand increases, is seasonal, well, what ends up happening is you end up actually improving your financials, and you end up making a profit eventually if you consolidate. And that's exactly what they're doing. They're consolidating. So that's one segment, guys. The earning per share will improve. It will turn positive eventually, and that's what we're betting on here. Where is it? Statistics. We looked at. Let's look at summary real quick. 1 year target is 6. Now somebody, you know the guy who put the 1 year target at 6? There's 8,000 analysts covering stock. He is 8,000. He's ranked 8,000. His prediction rate is 50% success rate. That's like anybody. That's you. You would do this prediction and you would get 50%. Who's calling me? Look. Let's go ahead with. I wanted to show you PE ratio, but I don't know where it was, where I specifically found PE ratio. Okay, let's go back here. Maybe we can find PE ratio. We go back to fundamentals, or let's go to fundamentals. Earning per share we covered. We go income statement. Balance sheet maybe. No, it's current ratio, not P ratio. It's current ratio we're looking for. We're looking for quick ratio as well. Diluted cash flow maybe. Now we know they have 1 billion in cash, guys. Oh, valuation, I think. Price sales, no, it's not here. Where did it go? Anyways, what I'm trying to say here with the quick ratio, guys, is, oh, there we go, ratios. The quick ratio and the current ratio, so right here, quick cash ratio, quick ratio, current ratio, it's improving, okay? It's improving significantly. Now look, 2020, okay, quick ratio 0.57 and current ratio 1.32. This is bankruptcy, almost bankruptcy, this quick ratio, bankruptcy material. Today, 2023, 1.74 and 1.15. Look, we've even improved the quick ratio to 1.38 and this to 2 in 2024. That's basically solid material to eliminate the fear of bankruptcy. Imagine the share offering they're doing, or they're about to do, the shelf offering. That's 2 billion on the balance sheet. You know what you could do with 2 billion? You could buy shares, you can buy your shares back, you can pump the stock, you can destroy the shorts by purchasing the shares back. You can issue dividends. You can put that in the bank and earn interest. You can buy bonds and earn interest. There's a lot of things you can do, safe havens and non-safe havens, to actually earn interest for the company. You can invest in Bitcoin. That's another thing. So when you have the cash, there's a lot of things you can do with the cash. Now, this is where we go over now the financials. So, to help you sleep at night, GameStop's financials are solid, balance sheet wise. The only thing here we're watching is growth. Are they cutting costs and are they seeing demand the same? Now we know demand is decreasing, but the revenue is also decreasing as a result, but they're actually coming out profitable somehow. Posting better losses than previously. So that suggests it's cost-cutting measures that are happening. That's why the revenue is dropping. But it's not fully that. Of course, revenue is dropping for, shopping in stores, but they will survive. And if they consolidate, like I said, they can come out on top. And GameStop becomes a target for acquisitions. We noticed Microsoft acquiring Activision, but they're in the gaming. Gaming is a huge business, guys. Just so you know. So I wouldn't. Now, do you know what happens when you end up turning the company around and it posts its first profit? Well, institutional money's coming on to this stock. They're coming to this stock to turn it around because they want a share of it now, eventually. And retailer money becomes second class to it. Okay, you cannot compare retailers to that. So there's a lot of possibilities with GameStop. That's what I'm saying here. So we noticed the store closures here, guys. 42, 120, right? 25, 37. So this is all because of the CEO, of course. He's been doing great in closing unprofitable stores. And of course, online has been their thing as well. But they do need a new segments to generate them profits. That's a given, and they're looking into it. Now, let's look at this. A lot of you got caught out here in the 60 and 64. But you notice this was not a rejection of a price. This dump. This was a rug pull of some sort. Somebody liquidated the huge position. And I don't think it's retailers either. Or maybe it's those from 2021. Nobody knows what caused this huge drop to happen. Because it's 300,000 shares. It's very difficult to liquidate 300,000 shares in such a small time frame, which is like 2 days. So I don't think this is retailers. I think hedge funds are joining the rallies to the upside, and they're hedging their positions. They even said it. So they might be long today, and once they lift their finger off the sell button, they benefit off the upside, and then they come back to short it again. I think that's the game they're playing here. And they even said it. They said, we're hedging this time, we're smarter. They're not going to lose. They're not going to bet on this to the bottom this time around. They're going to play it up, down, up, down. So this is GameStop, guys. I want to just look at the daily. Now have a look. This is a beautiful chart. Okay, here's the daily. This sign of reversal, and then you get the hammer candle. That's all you need. 2 hammer candles. This is a dragonfly doji, and this is a hammer candle. Both are bullish and indication of reversal. Now you needed 2 of these confirmations to say it's a reversal. Now this, I don't know what this is, but what I can assume now is the next candle that opens will be a green one, which is today, a green one, and it will be right here. Okay, and it could push down to test this support. Now these little buddies are supports, and push back up. And as it pushes back up, you get this. Okay, so you get this full green candle, and that's what you're looking for. Alternatively, what you get is one more day like this, because each candle here represents the day. Okay, I think this is Monday, this is Tuesday, this is Wednesday, and no, I think this was Monday or Friday. This is Monday, this is Tuesday, and this is Wednesday, and the next one could be Thursday, which similarly can be a candle like this, maybe wicks like this, and then you get Friday, which is this. Okay, and next week you get this. Now that's one scenario with the chart. The other scenario is you get this candle, okay, these candles like this, and a huge green candle back up that way. So what you just did here in this case, you went down to support level. It's so rare to see this where everybody's expecting support of 18 to come. Everybody wants it. Everybody's expecting 18 to come. But it's such a trap. Everybody's scared of going to 18 because they know there's a lot of buyers onto this stock. So maybe the first scenario makes more sense than the second one. But the second one could also play out. But either way, the actual direction is going to be this way. So guys, hopefully this quick analysis has helped you. Smash that like button so other people can see it. Do not panic. Personally, I'm not selling no matter where the price goes, right? I'm only selling at a profit, and that's it. See you guys next time, and I appreciate you for watching. Peace.